2 years back, I purchased an RV from a person immigrating from South Africa. We agreed on a price, and I paid for it in Krugerrands. No problems, no issues, completely off the radar, and the person took it with him to Switzerland. Hi, this is Mike Maloney, and I wanted to share this article on Money Week with you. So gold and silver are starting to get in the news more. This is good for a precious metals investor. Gold at 5,700, I like the sound of that. And then we go down into the article, and it talks about the bull market. There was a low in 1999 at 250, and that's when Gordon Brown, the exchequer of Great Britain, sold 2/3 of Great Britain's gold right at the very bottom. They call it Brown's bottom. And then the low was retested in 2001. It was within a couple dollars of it. And it ended up in May 2006 at 720. I remember all of this pretty well. So the global financial crisis came along. Gold plummeted along with everything else to below 700. And I loaded up on precious metals during that pullback. I more than doubled my position during this pullback when everybody was panicking and dumping their precious metals. And they were doing that to make margin call on all the stocks that they hold. Anybody that had gold on their brokerage platform, they had to get liquid, they had to cover margin call. And so they sold anything they had that was in profit and covered all of their losses on their stocks. So the gold price broke out to new highs above 1,030, and they eventually, with the Greek financial crisis, they hit 1920 was the gold price, and that was back in 2011, I believe. Then came the bear market, 5 brutal years of pain. It dropped all the way to 1,040. Period between 2018 and 2020 saw gold rally again north of 2,000. It was actually on August 7th, 2020, it hit $2,089.20 according to stock charts. But here we are in early 2023, and guess what? As I write, gold sits at 1920, the same price it was back in 2011. And so it goes on to talk a little bit more about some other things, but let's take a look at the gold price. So here we are with that double bottom, 1999 and 2001, and this big run up, and then that crash of the global financial crisis that took it below 700. I made a lot of purchases down there. And then it ran up to the peak. Now, I knew this was not the peak. The Dow gold ratio had not reached the points where I knew that it would eventually exceed this peak. And there's a couple things that told me that. Another one that told me that was that silver had peaked in April at $48, and this was August. And so it's interesting. That was August, and this peak was in August as well. So gold seems to like to peak in August. So here we are back up at the same highs all these years later. You know, you're talking 2011, so you're talking 11 years later. Well, what has happened in the meantime? This article goes on to talk about a presentation that Grant Williams gave in 2016 called What If? And back then, pension funds had a weighting to gold of 0.15%. 0.15%, 0.1/10% weighting to gold, and what would happen if they increased those. So he asked the question, today pension funds have 56 trillion under management, and if they went up to 1%, but he says, let's be more conservative and just go with 2/3 of 1%, 66 basis points. So instead of 0.15, this would be 0.66. And then he says, with that amount of, he calls it money, this is currency, it's not money. With that amount of currency, you could buy up every single company that digs up money in the Philadelphia Gold and Silver Index. That's called the XAU. And with what's left over, you could then buy every share of GLD, the ETF GLD, and take delivery of all that gold. And then with what's left, you could, with all of those scraps, you could still buy GDX, which is a gold and silver mining index, GDXJ, which is the juniors, SIL, which is silver, and SILJ, which is the junior silver miners. And so you could buy up pretty much the entire mining sector and GLD with this difference of, if they went with a 0.66% allocation to their to gold in pension funds. Then later on, he gets to this chart of the S&P 500, gold divided by the S&P 500. So this rise from, this whole century, this rise from the year 2000 to 2011 is gold outperforming stocks. And then from then on, it's stocks outperforming gold. And we are way down here now, which looks like a great entry point for gold to me. I've just been accumulating the whole time because, this is during the Greek financial crisis and stuff, and we have had crises after crises, and we're headed for another one right now. The Fed will push the economy until it breaks. They're going to keep on raising interest rates. They've shown their hand on that. So, but it says at 1920, gold is a lot cheaper today than when it was 1920 back in 2011. So let's just, instead of measuring this against stocks, we are very, very, to get back to this ratio, we got to go back all the way to 2007, 2006. So where is it at against inflation, against the dollar? Well, here is August of 2011, that $1,920 high is 25.1540 as of the end of last year. So by this month, this is about 2,520. In other words, it is $600 higher than the current price. So the inflation-adjusted price of 2011 is now $2,520 roughly. So gold has a lot of room to move. The great thing about precious metals is there is a floor under them. They can't go down and stay down because there's something called mining costs, and that also goes up with inflation. And just a reminder to all of those pension funds, the world's central banks are now, they're the biggest buyers of gold on earth, and recently they have been buying the most amount of gold, just very recently. And then getting to the economy, Nick Gurley says that KB Homes, a large home builder, just reported a 68% cancellation rate, meaning that over 2/3 of home buyers walked away from their contracts in that quarter, leaving KB Homes with a massive pileup of inventory. And just to zoom in on some of the graphs in this series of tweets, canceled contracts, and it was 13% last year, and you can see how far above the average this is. And then that means that it leaves inventory of homes that are called quick move-in homes. You can buy it and move in today. So quick move-in count and the inventory is up 50% from where the pre-pandemic levels and 200% from where it was a year ago. And that brings us to the construction backlog here. So these are homes under construction. And what you see here is that, there's been a couple of times when we've been in a bubble this big. And according to Dr. Robert Schiller, the price bubble for homes right now is the biggest bubble ever. We're just coming off. We're deflating right now from the biggest bubble in history, bigger than in 2006, according to his data. So I have a few memes here coming up after this viewer feedback here from Nikki Smale. I thought I should share this to the broader community. 2 years back, I purchased an RV from a person immigrating from South Africa. We agreed on a price, and I paid for it in Krugerrands. No problems, no issues, completely off the radar, and the person took it with him to Switzerland. And so you still can buy some. You're supposed to monetize it. You're supposed to make out a receipt that has a price in the national currency. And one of the problems with Krugerrands, they don't have a fiat currency price on them. A U.S. Gold Eagle is under the Legal Tender Act, and you can pay your taxes with it at $50 per ounce. And so you should be able to sell something and put down on the receipt $50, the amount monetized $50 per ounce of gold. So the prices that the government puts on things, it's like they ask some clerk and he just grabs a price out of the air. None of it makes any sense at all. So moving on, I've got a few different memes. These are schools, and this is how they treat the students that just memorize everything, while students who are good at problem solving are drowning, and students who are good at creative and critical thinking, they are just completely left underwater. And this is very true lately. The colleges and stuff are just turning out a lot of very programmed people that are not thinking for themselves. And so, of course, you're allowed to ask questions. Here is the list of approved questions. You're absolutely free to study and investigate it for yourself. Here is the list of approved sources. We're not trying to stifle thought. We want you to learn everything you can as you reach the approved conclusions. And I want to end this with a quote from the great Richard Feynman. I would rather have questions that can't be answered than answers that can't be questioned. I want to thank you for watching. We'll see you next time.